What's going on, guys? In this video, we're going to go over how to analyze a duplex here in the Bay Area. Coming right up. Hey guys, how's it going? My name is Sean and I'm a real estate investor based here in the Bay Area. And on this channel, we go over real estate investing tips, strategies, and current events to help you learn more about the business and to help you become a real estate investing boss. On today's episode, we're going to go over a submission that a fellow YouTuber sent me who asked me to analyze a potential duplex deal here in the Bay Area. And since he wasn't able to make the deal work out, he let me know all the details and even gave me permission to use the address here. And if you have any deals that you would like me to help analyze, feel free to send to me. You can email me at sean@everythingrei.com. So without further ado, let's hop on in. So this property is in Santa Clara. It is 1327 and 1329 White Drive. This is a duplex, and typically I actually don't invest in duplexes here in the Bay Area because the price to rent ratio generally doesn't make sense. Buying a single family home, duplex, triplex, and maybe even a fourplex doesn't really make sense unless you can buy it at a significant discount. So already off the bat right here, it's listed on the active market, which means that getting it at a steep discount is probably not likely. The market price here is around $1.4 million, and each unit is a 2-bedroom, 1-bath. If we just take a look at the description here, this is in Santa Clara. It's a very nice area. It's on White Drive, near San Tomas Expressway. I know this area very well. I drive here all the time. I have a property somewhere in this neighborhood. Koreatown's over here for some amazing Korean food. And scroll down to the bottom of the Redfin page. We can see here that there are some homes that are being sold for around the 1.4, 1.3 range. But what about for a duplex? This one right here is a duplex. And you can tell because there are these two garages next to each other and they're all like one-car garages. And then it's kind of like a symmetric look. So one side has 2-bedroom, 1-bath, and the other side also has 2 bedrooms and 1-bath. And if you can see here, this one sold for $1.4 million back in May of this year. So 1.4 is a very strong number. It's a comp for what you would get. And that's also the thing about duplexes. Unlike the video I made a couple of weeks ago about multifamily investing in the Bay Area, with a commercial building, they value the property based on the income. So if your income is a certain amount and you divide it by the market's cap rate, that's what the value of the property is going to be. So if the net operating income is $100,000 and your cap rate is 4%, then your property is going to be worth $2.5 million. But in this case, because it is a 4-unit or below, they're just going to use market comps. So even if I super juice this property and increase the rents like crazy, it doesn't matter. They're going to compare it based on the previous last sold price. So because a duplex sold for $1.4 million in the past few months in the same neighborhood, they're going to say, all right, your property is also worth $1.4 million. Now let's look at it in an investor's perspective. Does $1.4 million make sense for a duplex here in the Bay Area? Since we're not going to flip this home, we're going to use a different calculator. We're going to use the property analysis calculator that I created a couple of years ago. This is not something that's super pretty. It's something that is just quick and dirty that you can put in some numbers and see if some numbers make sense. And if you guys want a copy of this, feel free to sign up to my newsletter. And after signing up, you'll be given a link to my Google Drive account that gives you access to all of my spreadsheets. This spreadsheet is just a way to calculate the rents and to check if you're going to be making a good cash-on-cash return. All you have to do on this thing right here is fill out all the stuff that's in the green boxes. So don't worry about filling out all these other things. Don't worry about filling out everything down here below. Everything besides the green boxes gets populated with the information that you put in the green box. So let's go ahead and just fill this out and see what we get. The listing price here is $1.4 million. We're going to assume that this is rent ready and we don't have to make any improvements. Down payments for a property like this could possibly be 20%. Let's do 20% down for now. The interest rate for an investment property nowadays is going to be about 4%. You're going to have a 30-year mortgage, and we need to do some calculations on the total rent per month. According to the email that the submitter gave to me, one unit is renting for $1,200 a month and the other is renting for $2,200 a month. So just by putting that in, we're only making $3,400 a month going in. To be fair, $1,200 a month is very, very, very low in Santa Clara. And we're going to do a little bit of market rent analysis afterwards to make sure that we can boost rents in the future. But as of right now, we're making $3,400 a month based on current rents. Over here for vacancy rate, You typically put between 10 and 5% down for a duplex, and we'll just put down 5% for now. You're going to assume that you can increase your rents by 3% every single year. And over here, you're going to assume that because of inflation, all of your expenses are also going to increase by 3% every single year. In the Bay Area, appreciation is pretty high. We could put down 5% for now. Some people in the Midwest are more conservative, and they say maybe 2% a year for appreciation. Property taxes in California are going to be about 1% due to Prop 13, and they're not really going to increase that much over time. So we'll just keep it at 1% for now. For property management fees, if you decide to get a property manager here in the Bay Area, they're probably going to be between 6% and 10% per month. If you want to manage it yourself, then 0 is fine. Number of units is 2. Insurance is probably going to be about $1,200 a year. And same thing like advertising, utility costs. If you're renting out the whole place, your tenants typically pay utilities, so you don't have to worry about that. Advertising is you need to do some marketing to rent your property out in the future. HOA dues, I don't think there's HOA on this duplex, so we're going to leave that 0. And any miscellaneous costs that you think you might have, you could put that here as well. So if we want to look at it as is, everything here gets populated immediately. You can see that your sales price is $1.4 million. Down payment is going to be $280,000. And your closing costs are going to be about $28,000. So overall, you need to put down about $308,000 to close on this property. Your mortgage payments are going to be $5,347.05. And you're going to see how the things break down. So on a revenue scale, you're going to get $3,400 a month, but your vacancy is going to be $170. That's that 5% little buffer we put down in case you have a vacancy for a little bit. So overall, you're going to be making $3,230 every single month. Your property taxes are going to be about $1,166 every single month. It's basically $14,000 for the year. Insurance, since it's $1,200 a year, it's going to be $100 a month. Over here, I put maintenance about 10%. This number might actually be lower because in the Bay Area, you probably won't be spending $4,000 on repairs on this property. But then again, you might, especially if it's an older one. So for safety's sake, we put 10% for maintenance and repairs. So your total expenses every single month are going to be $1,606. So if your expenses are $1,606, then you subtract that from your gross, which is $3,230, you're going to be netting $1,623. But then you have the mortgage on top of that. So your mortgage is going to be $5,000. You take that away from your net operating income, and you're going to be losing $3,700 every single month. A negative cash flowing asset like this is going to hurt a lot unless you already have a very stable income where you don't mind losing that money. You see, this is the interesting thing about the Bay Area. There are some people who have so much income that they don't mind losing income from assets like this because they know they'll make it back once they sell the property in 20 or 30 years down the line. And during the whole time, the money that they lose counts against their income, so they're actually paying less taxes up front. And it makes sense for some people. But for most people who want cash flow, this is not the deal for them today. But then again, we're also using the current rents. And we already mentioned that the current rents today are actually a lot lower than they should be. So how can we find out what rents in Santa Clara truly should be? One thing you can do is a rent comp analysis. So you're going to look on websites like Craigslist, Zillow, or apartments.com and find out what a 2-bedroom, 1-bath in that area can rent for. So just for simplicity's sake, let's hop into Zillow and see what they say. So we go to Zillow, we zoom in to where we're supposed to be, and we notice that White Drive is right here. And unfortunately, there are no rental units available for White Drive at the moment. But if we zoom in a little bit, we can see that homes in the area are going for about $3,000 or so a month. And if we look for the 2-bedroom, 1-baths, you can see here, it looks like some apartments are $2,300, $1,795 for a 1-bedroom, 1-bath. For this apartment, it's a 2-bedroom, 2-bath, 1,000 square foot. And so that leads me to believe that I think at best, for a duplex in this area, you can get $3,000 a month. It's not going to be the easiest, and it's definitely not the conservative method you want to use. But if you manage to bring it out to its full potential, $3,000 per unit is possible. So if we pull that into our spreadsheet and we look at how much we can actually get, and we type in 6,000, let's see if it's a good deal or not. Okay, so after putting in 6,000, you can see that even though we're making more money than before, we're actually still losing a good amount because our mortgage is so high. So that's also a thing about investing in real estate. Your cash flow is a function of your debt. So if you have no mortgage, then you would have $3,833 every single month. But with a max loan, you're going to be losing $1,513 every single month. So if you're able to put down more for down payment, if you're able to somehow get a loan that's even cheaper than what they're offering today, then this could make sense on a cash flow perspective. Another alternative is if you can do something more fancy, like what if you do fully furnished rentals, then maybe you can rent out each room for even more than the $3,000 for the whole unit. Or maybe you can do Airbnb. Right now, because of COVID, Airbnb doesn't really make sense. So honestly, I think $3,000 per unit is already very, very fantastic for a duplex. Again, it is very hard to get that as well. And on a cash flow perspective, it looks like you are going to be losing money every single year. Your cash on cash return is going to be negative 5.9%. But let's see if this deal makes sense or not as a total, as a whole. If we look at our total ROI though, it seems like we're actually making a good return. And now why is that? Again, it's because in the Bay Area, your appreciation is higher than the other parts of the country. So we put a 5% factor versus 2 or 3% factor. As you can see, your total return on investment actually increases. You're actually positive from year one because the whole time you're losing money, you're actually paying down your debt, you're building equity, your property is appreciating, and eventually that appreciation is what's going to make you very wealthy in the future. So basically the way this spreadsheet works is after you fill out everything, and it's even going to fill out this table over here, which is going to show you your total return over time. So for year one, you can see that your gross income is this much, and you're going to be losing some money, and your cash on cash return is going to be negative. But as the years go by, as your rents increase, your cash on cash return is actually going to become positive, and it actually will start making a lot of money. Like if you can wait 30 years down the line, then you'll be making a whole bunch of money, and once your mortgage is gone, then boom, suddenly your returns are at like 36%. So it's doable if you hold on to it long enough. But more interestingly, your total ROI is always positive because your appreciation is going higher than the money that you're losing from the negative cash flow. And as you can see here, your returns can be 100%, 150% if you hold it long enough. And that's why it's shown like this on the spreadsheet. And I'm all about theory crafting. So on the very bottom of this spreadsheet, I even have a cash on cash return on investment versus your down payment percentage. So what that means is, what if I only put down 20%? What's my cash on cash going to be? Well, it's going to be this number right here. What if I only put down 10%? Well, then my cash on cash is going to be this much. And this makes sense. The less money you put in on a property that isn't really cash flowing, the more negative your cash on cash return is going to be because your debt's going to be higher. So if you put down, let's say 30%, then your cash on cash ROI is going to be negative 2.4%. So after analyzing this deal and looking at the numbers, I would say that this deal is definitely not for newbies. It's not for someone who doesn't have a high paying job and not for someone who isn't able to withstand that blow of a few $1,000s every single month. If you have a property like this, you should probably be earning an income north of $200,000 a year and not have any other major debts that you need to pay, because losing $3,000 a month is really going to hurt and it's going to negatively affect your mindset. But as you can see here, if you do have the capital, if you do need a reason to quote unquote lose money every single year for tax reasons, and you don't mind holding onto a property for a long time, this is going to be an absolutely great deal because over time, the value is going to appreciate like crazy and you'll be able to sell it for a lot in the future. Although ideally, you want to find a property like this for under $1 million that needs a significant amount of rehab work. Do the $100,000 or $200,000 of rehab work on the property and then do a cash out refinance to get all of your equity back out and then rent it out like this. I hope you guys found this analysis helpful. Again, if you guys have a deal that you would like me to analyze here on YouTube, feel free to send me an email. My contact information can be found down in the description below. And if you guys need help financing your next property, feel free to contact me as well. I provide hard money lending loans for properties just like this. If you guys enjoyed this video, be sure to smash the like button, subscribe to the channel, and hit that bell notification to see more videos just like this one. Thanks for watching, guys, and I'll see you next time. Take care.